Hey, what's going on, guys? I'm Dr. Boyce Watkins from Your Black World and the Black Business School, and I want to say welcome to the Black Financial Channel, where we talk about financial topics from a black perspective. I'm going to give you guys a quick update on Uber stock. Uber stock has hit a disaster zone. This week, Uber had an earnings report in which they did not meet earnings expectations. They fell way short of the expectations. This is not a surprise for people who understand Uber. Uber has been losing money, hemorrhaging money at an insane rate for a very long time. I think to the tune of about $5 billion a quarter. The reason companies like this are able to survive is because they have so much financing that they can kind of do whatever they want. And the problem is that at some point, all that can come to an end. Now, let me read some of this to you. This is from Market Business Insider. It says Uber stock price has sold off considerably following the company's earnings report last week. Shares closed at a fresh low Monday at 37.01, the lowest since May 13th, and it's now August 13th, the day I'm doing this video. The company IPO'd May 9th. Let's see here. So they said the share sank more than 7% to a record low on Monday, closing at 37.01. The stock's previous bottom was May 13th at 37.10. Last week, Uber reported second quarter earnings that fell short of investor expectations and catalyzed a sell-off that sent shares down as much as 10%. Despite recent struggles, Wall Street remains bullish on the stock, with many analysts recommending the name as a buy. Quote, while there are considerable risks in ownership across the space, given the intense competition, regulatory issues, and operating pressures, we continue to believe the risk-reward in owning the leader in this space is favorable and remain buy-rated, according to Goldman Sachs' Heath Terry. In this third quarter, Uber has begun a series of cost-cutting measures. In July, the company laid off 400 marketing employees worldwide, followed by a hiring freeze on U.S. and Canada-based engineering roles. Now, I think that's really fascinating because when you're laying off 400 people in your marketing division, you're gonna typically pay a long-term price for that, but you may get a short-term benefit, a short-term pop in your stock price because perhaps it may sneak under the radar with the analysts that you can actually exceed your earnings expectation for the quarter. And as Uber makes announcements throughout the quarter that they expect their earnings to be higher because they've taken these cost-cutting measures, you might see a trickle upward in the stock price if Wall Street is convinced that these messages or that these these messages are credible. Now, let me see here. I got some shares of Uber. Let me see what I'm look here in the Robinhood app. They actually give you analyst recommendations. 68% of all the analysts recommend buying Uber stock. 32% recommend hold. 0% are recommending a sell, which I think is very fascinating. The buyers are basically saying that Uber's position in the autonomous vehicle race could equalize gross and net revenue after no longer needing to pay drivers. So I was in LA this week. You guys know I was out there speaking. I spoke in South Central, and then I also did an investing seminar as well. When I was talking to some brothers out there, they were Uber drivers, and they were telling me how Uber has been nickel-diming them to death, and there's a lot of labor unrest because Uber isn't paying its drivers what they used to. But what Wall Street is leaning on is this idea that once Uber becomes focused primarily on autonomous vehicles that don't need drivers, a lot of those drivers won't have a job anymore. So you want to think about the long-term implications if you are an Uber driver. I know some of you are driving Uber to make extra money. You may have to find a way to fit in another way. It also says Uber's aggregation of multimodal offerings will drive in-app stickiness. Multimodal offerings. Sorry, I'm thinking multimodal means things like Uber Eats. I think they have Uber experiences now where they can give you a tour of the city, making Uber a one-stop shop for all transport needs. So what they're basically saying is that these companies like Uber that they literally bleed so much cash trying to develop market share, what they do is they get this big base of customers. And once they have this big base of customers, then they can go back and continuously remonetize based on what they what they think they can get the customers to also need from them. Pressure to pay a minimum amount per trip to its contracted drivers could create a barrier for entry for smaller players, helping Uber in the long run. So they're saying that If there's a requirement to pay your drivers a minimum wage, that's going to make it harder for competitors to come in, which could be helpful to Uber. Which all these things make sense. I'm not going to argue against this. You know, if you want to know what I'm doing, I'm a buy hold kind of guy. So I did lose some money on my Uber stock, but you know, I may reload and actually buy some more, and you know, because I actually do believe that Uber stock is, you know, could be a good buy. But I do think that there is a danger in these business models that companies like Uber use. You see, their business models are built on this whole idea that you just go out here, you spend just a ton of money, get all this market share, and you lose money for 4 or 5 years, and then one day, you know, you figure out how to make it profitable. That's a very risky thing. It's almost like jumping off a building and building your parachute on the way down. That's a very dangerous way to live. So just be careful when you think that way, you know, do what you like to do. Do what works best for you. All right, guys. So I'm out of here. Have a good day. Please hit the thumbs up button, share, and subscribe. If you haven't learned to buy your first share of stock in the Black Business School, two options. One, you can go to blackmoney100.com. There's a free training on there on how to buy your first share of stock. That's blackmoney100.com. Also, go to theblackbusinessschool.com. theblackbusinessschool.com. You can sign up for free. We also have customer enrollment specialists. Conversational enrollment specialists who can talk to you about your long-term financial plan, what you're seeking to do, what your goals are, what your dreams are, and help you figure out if there's a curriculum that will work for you. And it's okay, no pressure, you don't have to sign up, but you should take a look. It's built for you, by you, funded for us, by us, and that's what we do in the Black Business School. We're very good at what we do. So I'm out of here, guys. Take care, have a good day. Make sure you subscribe, hit the thumbs up button, share button, subscribe button, all that good stuff, and I will see you soon. Take care. Bye-bye.